Hello there and welcome to professional trading. So lately, for those that have been sticking on, we've literally been working a lot. We've had to touch about the boom, crash, volatility, and our previous videos were all about range break 100 index, which is pretty interesting and a very nice place, but also risky. The indicator of my previous video. So on this video, I'm going to be showing you how to scalp the boom and crash, but well, I'm using the boom mainly as an example here. I'll also do for the crash later, but for now, let's just take things at a step at a time, no rush. So I'm teaching you how to scalp the boom 1000 index with a certain indicator or strategy. So certain indicators and strategy. So the thing is, take note, this is a scalping let's say scalping lecture or some sort, not to take spikes and all. Well, you can probably risk for spikes, but I'll just, like I said earlier, just for scalping. So once we talk about scalping in trading, we're talking about a state where you have to where you don't have to be greedy and just earn money little by little, compound interest, earn $5 today, $10 now, or probably hours later you go into the market for $1 and just being obedient, diligent, and sticking to the market plan. So obviously, most of you must have seen this indicator somewhere because it's a free indicator, obviously. But most of you might not have really understand how to make use of it. So that's what I'll be doing in this video. So, like, for those of you that have been sticking to my channel, you understand that I would like to go through everything carefully, so you know what you're going into, and I'll always be truthful to you if an indicator strategy is going to be 100% legit or correct, or the prediction are going to be right. So let's dive straight in, because a good market, something is really happening right now in the market I would like to explain as we go further. So I wouldn't want this to pass us by, obviously. So basically we're going to be using the moving averages, two moving averages, an MACD, and a relative strength index RSI for this trade, obviously. And some of you that have been sticking to the channel are familiar that with some of the indicators we're going to set up with these almost similar parameters. But well, that we don't have an issue here. This is quite simple. So obviously, like you see, our moving averages are always these lines that you can see here on our screen. So the blue and the lemon line are moving averages, and then when we have a red line here, it's also part of our MACD. Then the lines here that shows like the market flow with like gives an automatic support and resistance levels, also part of the MACD. Then while the white line, as you can see here, is our RSI. So let me just show you the parameters real quick. So for the first moving average, this is what you'll have to screenshot or pause this video to make a setup on your own part if you have to. So it's pretty easy. Period 23, I don't need to call out everything here, so I think we're already familiar with the system, and like I said, professional trading. So if you're new to the professional trading family, I wouldn't advise you to just you can jump into any video and you understand it, obviously, but go down to previous videos we've done, try to catch up, because it's a family we have here, and we're trying to take everyone all along. So let's dive straight into the second moving average. So these are our second moving average. Quickly take a screenshot or pause this video to quickly set the same parameters on your own MT5. So for those that are similar, you do know by now that using an MT5 meters with a 5 and not 4, but these parameters can also work for either 4 or 5 also. So let's check out our MACD. Yeah, these are going to be the parameters. EMA 12, slow, that's for the fast EMA. The slow EMA 26, MACD SMA 9, and then our main. You can set the pixels to 3 because pixels actually tells you how thick the lines are. So if you set 2 or 1, the lines will be much less thicker than 3. So I usually just left that 3 for now. Yeah, so it's really bold, and it doesn't matter. So just set this to that, and pick your colors. Now I'm using obviously a dark background, so I use colors that are a bit distinct. So I'm using a white color here and red. So you are using a dark background, you use dark color, obviously you're not going to see anything. So you have to use brighter colors for you to be able to distinguish things here. So that's about it. And then our relative strength index. Yeah, this is what we have, our relative strength index. Take note of the levels. You have to come and click in here to set our levels 25 and 70. That's just it. And then yeah, period 6 apply to close 4 pixels and white. That's done. And then yeah, so if you had all that, we're done, and this should be your setup. So now, okay, let's show you this. At my RSI, I'm using a white pixels here. Now I can try to use anything. Okay, let's just be distinct. I'm going to stick to a lighter color, but I'm not going to use white now. So let me just use yellow. Yeah, you can see it there. That's the yellow line, so it's distinct. And yeah, so I think we're good on that. All right, so let me really show you real quick what the market's all about. Now there are 2 levels to this. Now you can probably decide to stick to the first moving averages to understand the market and scalp with it, but these parts also help. So let me show you how this works. First off, now let me look for a good example. Okay, even right here now, where the blue line crosses over the blue line crosses the lemon line. I can try to put that as red if you want to, or any other color. I'm using lemon on this one. So where the blue line crosses the lemon line shows that the market is going to change direction. So it crossed it at this point now, and you see that throughout we had a downward trend. Now take note, while it crossed the downward trend, our MACD was also showing us here that it was a downward trend, like it's trading on a support on a resistance level, not a support level rather. So if I'm to use this line here, so take note of the cross point, yeah, the point across, and also the point where the market changed direction. So you can see that you can safely go in for a sell in the market. Don't be scared of either of the spikes, and probably just take your profit. Now taking a profit in this market has to do with this parameter set here. Now, so once you get to 25, you take your profit. Don't stay in the market for more than that because of, or just get greedy about anything. Once you get to 25, you take profit. So you can see that it got to 25, took a bit down, a little downtown, and then corrected itself. Now it had a spike here, and now there's also now this is a 5 minutes candle. Take note, it's having also a sell again, but I'll come back to that. So now that's having a sell, you're going to go in, yeah, but at this point, whenever the market is above the 70 parameter, don't go into the market, and when it's lower than 25, don't go into the market. I hope you understand that now. So yeah, that's just about it. And like I said, go into the market only when you have or experiences these crosses here. So then we've had one here. For a professional and disciplined person who's just here for scalping, you take your profit down to where it takes you 25, and you leave the market. This is a 5 minutes candle. So whatever profit you get from the initial point, that is if you were able to catch up here, or even at this point and to this point, that will be where your 25 hits. It's going to be quite something since the 25 margin. So you understand how the candles work. The 25 minutes candle talks about amount of details each candle holds. So it's about 5 minutes of details each candle holds. So yeah, let's move on really quick because I think we're making this a bit longer. So straight up, obviously you can see that again here. The market was unstable at this point, even though there were multiple crosses here. Now with this kind of unstable market, you can decide to just stay away from the market. Now before it became this unstable, let's zoom out a bit. You can see that like a great miracle happened here or something. So first off, the market crossed it here. You can try to go into the market because the blue line was below the lemon line, so you can try to go into the market for a sell. And even though you out the spikes and all that, you can probably just stick to the market until it gets to this point where you decide to take your profits, obviously. And with that again, yeah, so the next time you just chill again until the next crossing happens. So the next cross where the blue line crosses through the lemon line again shows that it's going to be an uptrend. And while that happened here, you can see that the market too should give us a signal of support. Now this MACD is being used for those that are not conversant with how to read support and resistance level professionally yet. So the MACD gave us a signal of support, so you can go into the market for a buy at this point. Actually, now you can obviously see that with this you can go into the market for a buy and you enjoy certain profits that's been going on. Now this market is obviously, as you can see, is unstable. So you don't have to go wait through all through the whole market. You just have to, stick to your plan. So after it goes up, you wait for it when it gets to your 70 point. Now that will be before the final okay, let's put it here. But before, yeah, the next two spikes that happen, so you have taken profit on spikes, and that will be a huge amount of profit if you were trading, you were buying the market. You leave the market, you let it come down a bit, because you can see that the market goes down a bit. Our MACD shows that it came below the 70, and you can try to go into the market a bit, touch your 70, you go out. Don't have to wait for that again, and just follow the flow that way until the blue line we correct. So now you can decide to stay in the market to this point, yes, and then the blue line will correct, and you just stay out, because if you get greedy, whatever you must have gained trading this market in the method I just told you earlier, you can possibly also lose that if you are careless in this same period of the market where it's unstable. So you can see that just how this trading works also. So you can see now we're having a spike. This shows that this is going to try to correct itself and go up a bit, because MACD shows that it's an upward trend. So you don't have to go into this kind of market because it's trading close to the 70 parameters and all that. So just like I said, well, save, and then you can watch my previous videos on resistance and support levels, and then learn to observe the market from other minute candle. Now we did these examples all on 5-minute candle. Learn to observe from the 1 minute, the 15 minutes, the 30 minutes, even, and you can go as far as the 4 hours candle. Now, just to be extremely sure, so you go into the market with full confidence. Sometimes those kind of parameters and texture might make you get nervous and unsure of yourself, but stick to this channel. Don't forget to subscribe, like, and leave a comment if you have any question, and I'm sure whatever uncertainty you have will be fully answered. So that's basically all in this video. Like I said earlier, don't forget to subscribe and share this video to your friends, family, and even your enemies also. Well, that's all for now. Bye, and see you in our next video.